Hey everybody, Ben Nelson, the everyday real estate investor here. Hope you're all having a fantastic day so far whenever you're listening to this. Thanks for tuning in to another episode of the podcast. I am going to jump right into today's topic. We're going to talk about something that's been a hot button topic, a topic of conversation for quite some time, if you're paying any attention at all, and that is inflation, right? That has been a hot button issue for quite some time. A lot of Fed activity trying to pull the inflation numbers back down, pulling those monetary policy levers that they always like to use to try to um, point the economy in the direction that they want it to go, and those things. So we live in a very we definitely live in an economy that is, there's levers being pulled. It's being manipulated, if you want to use that term. It's not just running at it on its own. It's there's things behind the scenes going on, and lots of different things happening that affect our economy. So what that does is it can create times of inflation. And so again, it's been a hot button topic of conversation for quite some time, and we're going to talk about it today because um, inflation is, it's not necessarily something that we should be afraid of. This is actually something that we need to understand it. We need to know what's going on, and we need to understand how we can use it to our benefit in our business. So we're going to talk about that today. So the first thing that I want to talk about first is, let's define inflation. Because it's really easy to mix appreciation up with inflation. Um, if you don't understand the concepts and if you don't see what's going on. Obviously, we're very aware of inflation right now, but in more normal economic circumstances, whatever that is, there's inflation still, and it's hard if you're not looking for it. It's really easy to not really tell the difference and know what's going on. So let's start with defining it first. So let's define appreciation first, and then we'll define inflation. So appreciation is basically the rise in value of an asset. It means the asset is actually worth more than it was in the past. And that can be for a number of reasons. There could be less supply, there could be more demand, there could be rising costs that are outside of inflation. There could be a lot of reasons why there's appreciation, jobs and income and all those things. But it's basically the rise in value. The asset value has actually gone up. Now, how is that different from inflation? Inflation is an increase in prices due to the falling purchasing value of money. So it doesn't mean that the value of the asset has gone up. It means that the currency is becoming worth less, and so now because of the falling value of the currency, the purchasing power of the money has gone down, prices have gone up, but value hasn't gone up. Now, what's the difference? So value, again, price. So if it takes more dollars to buy something, that doesn't mean the value has gone up. It just means that it takes more money, right? We've seen this in the store with groceries, and we see this at the pump, and we see this in all sorts of places where it's just the cost of living has gone up due to the inflation that we're seeing. So you might ask, okay, I'm buying real estate, prices are up, values are up, whatever, whichever one it is. What does it really matter as long as it's going up in value? And I mean, there's some, you have kind of a point there if you're asking that question. It's going up. What does it really matter? But it can hide things, right? So you may think, if you don't understand the difference, you don't really understand what's happening with your investments, you may think you're doing really well and you're in a market that's doing really well, when really all you're doing is experiencing inflation, and your asset value is not really going up. So you need to understand what the forces that are driving your investment are, so you can make the best investment decisions, and you're not just thinking you're doing well, but really all you're doing is just seeing your price go up because of the currency falling, and not because your market's doing well, your assets doing well, and you're actually experiencing value increase. And now both are actually good. I mean, prices going up and values going up, we're going to talk about that more. This is why real estate is so appealing to so many people. Um, so appreciation happens when there are factors in the market, which I touched on this earlier, that are pushing prices up. Things like supply and demand, jobs and income, net in migration. The population is increasing. So things that are causing the value to be more uh, because of all those factors, supply and demand, and all those economic factors. Inflation happens outside of those drivers that are going to drive that value up, and it's simply a function of the falling value of a currency. So the falling value of the dollar. It just takes more dollars to buy the same asset, if that makes sense. Um, many see prices going up and assume that it's appreciation, and this is what we want to make sure you're not doing, is assuming that it's appreciation, when it really could just be inflation, because you could be doing better. You could be um, doing you may not be in the place that you think you are with your investment, and you may just be experiencing inflation, not actual appreciation. So you want to know the difference. You want to know which one you're actually experiencing, and likely you're if you're in a good market, you're going to have a little bit of both, because we live in an inflationary economy. There's going to be some inflation, but hopefully part of that growth is it's not. Hopefully, it's not all inflation based. Hopefully, it is a combination of inflation and appreciation. And inflation is great for real estate owners. Why? Because it your whether your value is going up or the price is going up. Again, we defined what the difference is earlier. It's going up, right? So whatever that force is, if it's appreciation or if it's inflation, your price or your value is going up. And so when you trade that later, it is going to trade for more dollars, right? Because if it's all of inflation, it just means it takes more dollars to buy the same asset. Your price has gone up. If it's appreciation, the value's gone up. So either way, you're going to see that. Now, we all know that prices don't always go up on real estate, but for the good majority of the time, over history, they have. Um, and people often state and point to real estate as being a great hedge against inflation for these very reasons, because again, it's an ass it's it trades in the currency, trades in dollars. So if the dollar is weakening, if it takes more dollars to buy the same asset, then that means that your price is going to go up. And so you're hedging against that by owning real assets, because as inflation happens, it's going to cause those prices to go up in your real assets, and it's going to take more dollars to buy that. So um, values I touched on earlier. Values price goes up along with inflation. So it means it takes more dollars, um, which are worth less than in the past. So 5 years from now, and this you can pretty much bank on, whether you can bank on real estate prices forever going up. That I don't have my crystal ball out. I have my thoughts on that, and I feel very good about real estate in the future. Um, but you can pretty much bank on that we're going to have inflation. We if you look at the history of the dollar, and you look at, especially once we went off the gold standard, what has happened? We continue to print money. We continue to have a weakening dollar, um, and that's probably not going to change anytime soon. We're going to continue down the same path, and so every single year we're going to lose. And actually, they target some level of inflation. So we've talked about, over the last year or so, trying to pull inflation back. Well, that's because it's been beyond what they want, but they actually want a certain level of inflation. And there's a whole lot of reasons behind that we don't have time to get into today. But when they're telling you, the people that are pulling the levers and making these things happen behind the scenes are telling you they want inflation, that is a sign, right? So we're going to continue to experience inflation, which means it's going to, in the future, you can pretty much guarantee that it's going to take more dollars to buy the same asset. So as long as the other factors are there, supply and demand and all that, you can, that pressure is always going to be there, pushing prices up. And so therefore, again, it's a great hedge against inflation. Um, Real estate is. Uh, So one of the other things that, and this is what you hear a lot in today's market is, um, and you hear this like literally every time, every you go back over the years of cycles and prices being high, and um, the argument continues to be that prices can't go any higher because they're already so high, and they're higher than they've ever been, and there's no way that they can keep going up because they're just too high, and they've never been this high before. And this is exactly why this is a terrible argument, that prices have to fall, because it's simply untrue. Just saying that something is as high as it's ever been and it can never get any higher because in the past it's never been that high. With inflation, that's exactly how it works. It literally is how it works, is that in the future is it's going to cost less. Now, it's not going to necessarily be worth more. You may trade more dollars for it, but it may have the same value in the sense of what the dollar was worth 10 years ago. But you are going to see higher prices on pretty much everything over time because of how our economic system works and how they target inflation. And again, we're not going to get, there are times when there's some deflationary effects in certain sectors and that sort of thing. I don't have time to get into that today. Really deep, we could get into that. But typically, again, we don't see that in the housing market. We see continued appreciate inflation in that sector. So um, remember, you get the benefits of this. And so this is a really big point that I want to make too. So we talked about this with appreciation in the past, and I just want to touch on it here again because I think this is a huge piece of it. That if we have inflation, even if we get down to normal levels, they're 3% in that ballpark that they target. Um, if that's happening to your asset, if your asset is going up 3% in price every single year because that's their target that they're hitting, what you have to realize with real estate is that you're gaining so much more than just that 3% if you're using leverage. Your return on the inflation, you're essentially earning a return on that by your price of the property going up. It's not based on what your investment or what the property is worth, is based on your invested amount, right? So, for example, you own a $500,000 property, it goes up, and this works the same whether it's appreciation or inflation, goes up 3%, saves from inflation. So that's a $15,000 increase. And you might say, well, that's only 3%, right? But what you have to remember is if you only put 20% down on that, you put $100,000 down, that's your investment. Your return is actually 15% because it's $15,000 against your $100,000 investment. That's 15% on your $100,000, not 3% on the $500,000. So the leverage increases your returns exponentially. And again, that works both with inflation and with appreciation. Your price or your value going up relative to your investment is what's important, but you get that increase on the entire asset value. Um, and the other thing that inflation does for you is that long-term debt becomes an asset, a even bigger asset to you, because uh, the debt goes down in value because in the future you're paying it back. You're paying that back with future dollars. And if 10 years from now, the dollar's worth 20% less, which is a pretty good bet, uh, you're paying it, you're going to be earning based on those dollars in 10 years from now, right? Wages will have increased, asset prices will have increased, all that, but you'll still be paying based on what you borrowed 10 years ago. So hopefully that makes sense. But you're basically shorting the dollar when you take out long-term fixed interest debt because you're betting that the price of or the value of the dollar is going to go down, which is a pretty darn good bet. And in the future, you're going to be paying those dollars off with dollars that are worth less than they are today. So that's a very important point. Hopefully that makes sense. but you're basically you're paying off that debt with money that's worth less than it was when you took it out, when you took that loan. Um, so I just wanted to touch on the high level aspects of this because this is a really important topic, something you really want to understand. There's a lot to this. I am definitely not an expert on inflation or economics or anything like that. There's a lot of great resources out there. Make sure you're looking at. I just want to bring your awareness to these things so that you're thinking about inflation and the economy. And I know that I wasn't doing that before I started listening to a couple podcasts and really looking at the macro aspects of what's going on in our economy and the world, because it affects your real estate. And yes, there you absolutely need to pay attention to your local market, what's going on there. You need to know all of that stuff, but you can't ignore the higher level, macro level stuff. That's how you're going to really um, put fuel on the fire to your investments by understanding those things, seeing where things are going. You may not agree with them, but it really doesn't matter. What matters is what's going to happen and where that's going to, the direction that's going to put the economy and your investments in, and then you put yourself in a position to take advantage of those things and have the best success and best results that you can. So we're in an inflationary economy. You can complain about it, you can not like it, or you can figure out a way to position yourself and use it as a tool to build wealth for yourself. So I think you should choose that one. Go out there and seek more knowledge in this. Again, I'm not the expert in this. I just want to bring people's attention to this and point to resources, all that, which I will do in some of my social media feeds. I will put a couple other resources out there, great people to listen to that know a lot more about this stuff than I do, so you can educate yourself and make great investment decisions for your real estate investment portfolio. Thanks again for listening. Go out there and keep learning, keep taking in the knowledge so you can make great investment decisions and buy some amazing investment real estate. Thanks for listening.